Hey, gang.
Howdy, howdy.
We've been talking a lot about forbearances, but it's a beefy topic, and we thought that we'd just drill a little bit deeper into what is a forbearance, why are we spooked about them,
Right.
what problems do we see coming on the horizon regarding forbearances.
Right. It's a topic that we got to continue to talk about because so many people have elected to use this as an option. And no judgment in that statement, but last numbers we saw was over 5 million, right, Rox?
5 million, yeah, so 5 million people in forbearance. Yeah,
it's a relevant topic, and you may see a spike in that coming up because the unemployment stuff government subsidies may start coming to an end here before too long. Who knows how many of those were actually being used to be making mortgage payments to keep current on those pieces. So as those pieces start falling off, we may start seeing that number rise.
That's right. And I think when I look at my concerns with forbearance, I mean, everybody by now has learned that forbearance doesn't mean forgiveness, right? So if you are in a forbearance, you still owe those monies, right? And really, when it comes time, what we're really focusing our concern on right now is what does it look like when you have to start repaying that? Right? The CARES Act offers some protections for government-backed loans, right? That would be
the Ginnie, Freddie, FHA, VA, any of those government programs.
Well, and to give you not everybody knows how this works, right? Let's say I go get a loan today from wherever, First Bank, Wells, whatever. I go get a loan to buy a house. Well, they originate that loan. That's called the primary market, the primary lending market. They turn around and they sell that loan up into the secondary market, right? So you may still be sending your bills to your mortgage payment to Wells or to First Bank or to whoever you've got your loan with. But in most cases, all they're doing anymore is sending out the bills and servicing that loan. They've sold it to another investor, a larger investor. So when we talk about government-backed loans like Fannie Mae, Freddie Mac, Ginnie, when we're talking about FHA, VA, these are in the secondary market where those loans go after they're originated.
That's right.
So when they're government-backed loans, those ones have some protections under the CARES Act.
They do under the CARES Act. And right now, as we've told you before, you can get 180 days in the forbearance program. And with special requests, extend that up to another 180 days. So potentially almost a full year for those that are basically saying, hey, I'm affected by this, and I'm not able to make my payments. And once you basically say that, the CARES Act is saying that they should give you that forbearance that you're asking for. There's not a whole lot of proof that's needed.
That's
but
right.
As we've been talking about and what we've been discussing, the big scary piece of that is the payback, right?
That's right.
We said, they've come out and, I found this on the Consumer Financial Protection Bureau's website.
Let's hear it, baby.
The CFPB. So they're talking about forbearances and the options and the things along those lines, right? And then it talks about when it goes to pay it back. So if you have one of those government-backed loans, like Roxane was just talking to us about, you won't have to pay back the amount that you were supposed to all at once, which has always been a big scare, right? You don't want to have to just all of a sudden have this stack of 5-6 months of mortgage payments that you're going to have to pay back. So they've said, no, that's not going to be the requirement. You don't have to pay it all back at once. And then there's a nice little hyphen that says, unless you can afford to do so.
That's right. Mm.
So like we've been talking about, when you go back and start talking to your servicers about the repayments of these forbearances, I have a feeling it's going to be much like qualifying for the loan in the beginning. Hey, send me your paycheck stubs. I want to see how much money you're making. Send me your bank statements because I want to see what kind of a nest egg you have in there.
Let me see your retirement funds.
Yeah. They didn't agree up front to what the payment program is. They said, don't worry about it. We'll work that out later. But what does that look like, right? It could very well be like, well, according to our calculations, you can afford to pay us all back. So go ahead and pay us all back. Or you can afford to pay us an extra $1,000 a month until we get our full forbearance amount back.
Yeah.
They may be the ones very well that are dictating what that repayment program looks like, or it's going to be a strong negotiation.
Well, we get back to the two first rules in the banking world. Rule number one is that the bank never loses, and rule number two is that the bank always wins, right? These are the two irrefutable laws of nature. And I think that also, even if this is not the plan, even if this is not the intention, right? If we just look at it logistically, we worked with so many people during the last downturn, people in real distress, losing their homes in foreclosure. We did a ton of short sales. We helped people negotiate their loan modifications. And one of the things that we saw with loan modifications is that literally whenever you're qualifying for a loan, any of you who've ever gotten a home loan now, you know it usually minimum that it takes is 3 weeks, sometimes 4, 5, 6, even in this environment, for you to submit all your documents to the bank, and then it goes to the underwriter and they review it and they ask some questions and blah, blah, blah. If they're going to be, a loan modification works the same way. And if a lot of these agreements or a lot of these negotiations are starting out with just, we'll figure it out later, we'll contact you 30 days or 60 days before the end of your forbearance, and then they're going to do an underwriting process times 5 million people, even if they have the willingness, ain't no way that's going to happen. You can come to Colorado and smoke some hope dope if you think that's going to go smoothly.
Yeah, but the whole work this thing out later is just so scary and stuff. What people may not understand, Rox, is, so, okay, you go into a forbearance, right? Well, the people, that secondary market that you were talking about,
Yeah,
they're still getting your mortgage payment even though you're not making it.
that's right.
That's coming from that servicer that you've been making the payments to, right?
Yeah.
So now all of a sudden they've been fronting you money on a regular basis, and they're going to be the ones that are negotiating with you on what that repayment looks like.
And they're cash poor right now. They're getting strapped because they're making billions of dollars in payments that they're not receiving.
Right. That they're not receiving, and they've got certain liquidity rules and regulations on them, being, you know, how many assets are they carrying, all that kind of a stuff. So they're very nervous. They really want to build those coffers back up sooner rather than later. So
They also know
their pockets.
that unlike the Great Recession, where most houses were upside down in pretty short order, at least through the beginning part of this, most people, if you bought more than a couple of years ago, most people are sitting in equity positions, right? So the bank has no incentive. They got zero incentive to want to work with you on that. The other thing that I'm really fearful of, right, is I did this little mind map. Oh, I love my mind maps. We're going to share the screen.
Prepare yourselves.
Be prepared. My team calls me the Unabomber when I get going on this stuff, right? So let's say you are in an equity position and you're waiting for them to contact you and do that negotiation for the repayment. As we just said, 5 million phone calls. I don't think they're going to happen in a timely manner. So I see some situations where somebody could be in an equity position in their property. If they were to sell, they would be able to bank the proceeds, preserve their credit, rent if needed until the market dipped or downsized, buy back in, and actually probably be in better position than they were before. But while they're waiting for the bank to negotiate the forbearance, because that period has ended, then their loan goes into default. And the only thing that the bank ever agreed to if you were in default was to take your house in foreclosure. So I'm very fearful that there are going to be a bunch of people who were in equity positions, and while they're waiting for the solution to come from the bank, that forbearance agreement renegotiation period expires, and in effect now, as they're continuing to wait for that negotiation, they go into default and the bank has initiated a foreclosure proceeding.
One thing that we have to know, Rox, is that the banks will always take a lump sum payment, right? If you're able to do that. And one of the ways to do that is, as you were saying, sell now, capitalize on the top of the market, pay them off that forbearance amount in the note payoff with the rest of the principal balance, pocket your money, hunker down, and buy back in when there's that opportunity that we think is coming.
That we think is coming. That's exactly it. So this is a complicated topic, and it's we're going to be talking a lot about this in what I suspect is going to be the next few years. As always, we really learned this in the Great Recession, that the sooner you have a conversation with us, with a CPA, with an attorney, if you are in distress financially or you think you will be, the sooner you start having those conversations, the more and better options you have. Right?
Knowledge is power.
That's exactly it. Knowledge is power.
And we're here to share our knowledge with you. If you got questions, you want to sit down, you want to chat, you want to dive more into Roxane's mind map and see the other legs of that, give us a shout. We're happy to chat.
Excellent. Thanks, gang.